In the early 17th century, the flower caused a whole country to go mad.
It was completely irrational, and I don't think you can explain it according to any logical scheme, that this entire society went nuts.
Between 1634 and 1637, tulips swept the Dutch into a collective frenzy that has become known as tulip mania. Their passion for the flower spurred one of the biggest investment bubbles in history, and for a brief time made the tulip one of the most valuable commodities in the world.
It was a pure financial speculative bubble, and it was about a flower. I mean, how amazing is that?
Hi, welcome to this video today, which is all about crowd psychology, an introduction to how the crowd loses money in any trading market. And the reason they lose is because they become part of the herd and their emotions take over, and this leads to their demise. And this will become clear as I go through the video. First of all, I've started with one of the most famous manias in history from 1637 Holland, the tulip mania. And it was truly incredible. The whole of Holland going mad for tulips, and yeah, a single tulip bulb before the bubble burst could buy you a prime piece of real estate. And I remember learning about that at school, and I was thinking, that is absolutely ludicrous. How can people be so stupid? And at school we learned about two other bubbles, so I'm sure many other people did as well, which was the South Sea bubble and the Mississippi Madness. Again, where the populations of England and France went crazy for worthless investment schemes. It all ended in tears. And what I found quite amazing was that Einstein actually lost money in the South Sea bubble. A true genius. However, he got sucked in to the herd and basically lost money. And I've always said in my videos that intelligence has got nothing to do with good trading at all. And it hasn't. It's got to do with emotional detachment from the herd. And for those of you who don't know much about those manias, I'd recommend a book, and I've seen it recommended by a lot of great traders. I've read it myself. It's fantastic. It's Charles Mackay's Extraordinary Popular Delusions and Madness of Crowds. It covers those manias and many others about how humans get deluded when they're in groups and do kind of stupid things. So it's really great reading, and I think you can get it free on the net now, so check it out. So today, our market's more sophisticated. I remember my teacher saying, yeah, of course we're more sophisticated today when I was learning as a child. But basically, when I grew up and then became a trader, I actually realised that, nothing's changed at all. The same emotions that caused those bubbles many, many years ago still cause them today. And you can see them. You can see the dot-com bubble back in the 90s, 87 crash. And it's where people basically just succumbed to greed. And I mentioned Einstein earlier, but at the time of the dot-com bubble, I knew a huge amount of highly intelligent people who got sucked into that. One guy I know, a really bright guy, lost everything. He just couldn't see that was going to end. And a lot of people were telling him, just wouldn't listen. He was blinded by greed. And with the herd, okay, you just got to basically, first of all, you've got to obviously detach yourself from them, and then you've got to understand how a herd works. Okay, so basically what happens in financial markets is a market will get pushed too far too quickly based on greed, and the herd acts in kind of it's a sucking way, if that makes sense, and I'll explain what that means. Let's say you've got something that goes up quite strongly, other people start to join the herd, then you've got the news wires reflecting the herd, and then more people come in. So it's like a snowball. But eventually that snowball actually will end. And you can see on any price chart you like, prices spiking too far to the upside or downside to varying degrees. And this is where people get into the market, greed takes over, everyone wants to get in on the action, make some money, and basically prices just go too far, but because the crowd is blinded by greed, they can never see the end, and then of course prices crash back. So how do you see the end of these moves? Well, basically, if you've got a big move, okay, on a chart, you've got a big price spike, look around the news wires and look for all your banks, brokers, and all those other intelligent people telling you that that move will be going on forever. There's no reason for that currency to turn, etc., etc. And you can see that's a bullish consensus. Then what you want to do is look at the price spike on the chart and then basically get an idea of value. So how do you get an idea of value? Well, basically what I like to do is put up some momentum indicators, run them back a few years, and basically see if they're at an overbought extreme. I don't just want overbought, I want overbought extreme on the chart to show, basically how overbought the market is. Then look at volatility. You should have high volatility in a price spike. Just see how volatile the prices are, how far they've moved. So just get an idea of that on the chart. Once you've got that, you've obviously got to pick an entry point to go against the herd. Now the majority will always just come in and predict. They'll just basically sell into a high or just below a high. You should never ever do this. You should look for a key level to break, okay? And by a key level, I mean it's normally going to be a good way away from the top. You'll normally be able to look at a chart and see, well, there's a first support level, second support level is the more important one. I normally find that is by a 20-day moving average. Just wait, don't try and predict, just wait for the key level to break. Key level breaks, go short, look to see if momentum's turning down as well, and basically hold it for a day and just see if the price closes near a low. If the price closes near a low, chances are you're going to get a follow through the next day. You're through a key level of support. That means that stops are going to get hit. People are going to start coming out the market, and that will feed the down move. Okay. If prices, this is what I do. If prices break down and they suddenly break back to near my entry, they're not in the bottom, say 20% of the bar, I would just cover that and wait for another opportunity. You're playing odds when you're going at turning points, and there's no harm in actually being stopped out once, twice. I mean, sometimes I get stopped out 3 times at turning points before I actually get it. But of course, because I'm after such a big break and my risk is very tight, it doesn't matter, but I know my winner is going to easily cover my losers. So don't be put off by if you get stopped out or have to take yourself out of the market. Just wait until you get that strong close to the downside. Normally, when you look at the news wires, when you see a price break in a big bull market, there's no acceptance of it. For example, you'll hear something like it's profit taking, which is one of those ludicrous sayings. You'll see it all the time on Reuters and Bloomberg. Whenever they can't explain anything, it's profit taking, and it is ludicrous because obviously over time 90% of traders are losing. So that is always a good indication. I always think that a turning point is probably here because they can't explain the move. So they just put down profit taking. So always look out for that. I found that's actually looking for that phrase around the newswires, maybe a load of money over the years. So then basically what will normally happen if you're near a low and you've got it right, it'll just then follow through the next day. And then you're short, you've got some profit on the board, you bring your stop up behind your entry, and then you actually have to look for obviously a support level on your chart to target. And basically what I do is if I've got a target in these big moves, I just basically put my profit take above the target. So I just in case of a rebound or whatever, I just want it above the target, get my profit out early, then I'm on my way. And you can do this in many pairs, and you will find you'll get some great opportunities. I think in each pair each year you're probably going to get 3 or 4 really great opportunities where you can see the crowd blinded by greed have basically pushed prices too far, and you can go for a turning point. I've always said trading in Forex or any other market, nothing to do with intelligence. Okay, it's to do with stepping back from the herd and basically understanding that that if you are blinded by greed, you are eventually going to lose. The majority are always blinded by greed. So if you're not, and you can move away, become detached, you can make money from those big trend changes. And human psychology never ever changes. If you understand that, and you understand that being on your own, basically standing away from the herd is the way to make money, you can do it, and you can be catching some of those great turning points. So thank you very much for watching this video. I hope you enjoyed it. Take care.